Welcome back to TechKidFX for another quant price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the quant chart, which at the time of this recording we have lost the 20-day MA and it's now acting as resistance. We have also lost a key area of support at around the $133.2 mark and continued pushing even lower. We have also fully maximized our red target area down here in the formation of this wave 4, and there are chances that very soon we are going to start that bounce to the upside in the formation of that wave 5. And at the time of this recording we have also lost a key area on the Fibonacci's, that is the Fib level 0.5, which lies at around the $133.9 mark. And before I get further into the technical analysis, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership. And allow me to continue with the video here on the 4-hour chart by first giving you a quick recap of what has been happening, where you can see that Quant, after making it to an all-time high, we started the bear market where we had been seeing our prices in this ABC corrective structure, which gave us a low at around the $40.1 mark. And after seeing the bear market low, we started a very nice bounce to the upside in a move that has been obeying the Elliot wave structures, where you can see that I have this Elliot wave structure in blue making its peak, having the wave 5 making its peak at around the $229 mark, and also completing the formation of that larger Elliot wave count 1 to the upside. And after seeing the formation of a larger Elliot wave count 1, whatever we expected next is a corrective structure in the formation of a larger Elliot wave count 2, where you can see that we have this ABC corrective structure also giving us a low at around the $94.4 mark. And after seeing the formation of a larger Elliot wave count 2, whatever we expect next is a bounce to the upside in the formation of a larger Elliot wave count 3, and this is what I'm expecting on the long-term scenarios, and sketching out a minimum target area to the upside in the formation of this wave 3 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, and that is at around the $397.8 mark, and that is the minimum that I'm expecting that higher Elliot wave count 3 to the upside to do. And in the formation of that wave 3, we also expect to see a fractal wave in formation, where you can see that I have this Elliot wave structure in red, where I'm terming that as the first wave. Then we have retesting the formation of that wave 2, then we started that bounce to the upside in the formation of that wave 3, which has now given us a peak at around the $165.5 mark. And after seeing the high for that wave 3, we started a corrective structure over here in the formation of that wave 4, and using the Fibonacci's, connecting them from the low of the second wave to the high of that wave 3, that gives me a minimum retracement area in the formation of that wave 4 between the fib level 0.382 and the fib level 0.5, and that target area lies between the $141.1 mark and the $133.5 mark, which is a target area that you have fully maximized. And at the time of this recording, you can see that you have lost the fib level 0.5, and because of that I'll have to extend my target area in the formation of this wave 4 back to the fib level 0.618, so that my target area lies between the $141.1 mark and the $126 mark. And it is within this red target area that I'm now expecting the formation of this wave 4 to come to a complete and give us the low for that fourth wave. And once that happens, then we can expect a massive bounce to the upside in the formation of that wave 5. And in my previous video, that is yesterday, I gave you the risk of losing the key area of support at around the $133.2 mark, and we also need to be prepared for a move that could give us a retest of this key area of support. And in case the retest is in and a success, then there are chances of continuing to push even lower and get us back to the next key area of support at around the $110.9 mark, and that is in case we see a retest. But in case Quant is able to regain the key area of support at around the $133.2 mark, that is break above it, give us a successful retest of that key area of support, then there are chances of continuing to push even higher, get back to the next key area of resistance at around the $147.9 mark. And in case we also manage to break above that key area of resistance, give us a retest and continue pushing even higher, then there are chances of continuing to unlock even higher prices in the formation of that wave 5, which I'm expecting here on the short-term scenario. And sketching out a minimum target area to the upside in the formation of this wave 5 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the high for that wave 3. That gives me a minimum target area at the fib level 1.618, and that is at around the $230.6 mark, and that is the minimum that I'm expecting that wave 3 to the upside to do. And once that plays out, then we can name this 5-wave structure to the upside as a larger Elliott wave count 1. So on the short-term scenarios here, I'm expecting the formation of this wave 5, but we also need to be prepared for a worst case scenario in case we see a retest of this key area of support and also lose the fib level 0.618, and that is at around the $125 mark. In case we lose that target area, then there are chances that whatever we are seeing over here could invalidate this Elliott wave structure that we have right here and continue pushing even lower and get us back to the next key area of support at around the $110.9 mark. And also taking a look at the indicators to see what movements will be supported here on the RSI. On the RSI, we are trading at around the 38 mark, meaning we have massive room for us to support higher movements in the formation of that wave 5. And also taking a look at the MACD, we have been able to print a bearish cross, fully supporting lower movements, and that is fully supporting the worst case scenario, and also making one more new low in the formation of this wave 4 within this red target area, and that could give us a retracement back to the area at around the $126 mark. So let's continue watching this target area that I have over here between the $141.6 mark and the $126 mark, because in case we lose this target area, there are chances of getting back to the next key area of support at around the $110.9 mark. And that's the update for Quant.